Good morning. Welcome to Diamond's Edge Live. My name is Greg Diamond, editor of 10 Stock Trader at Sainsbury Research. And in this week's show, we're going to be talking about war. We're going to be talking about oil. We're going to talk about inflation and the Federal Reserve. Federal Reserve comes out later today with what they're going to do with monetary policy. We'll see how that plays into what's going to happen with stocks, what's going to happen with interest rates, what's going to happen with gold. But this week I want to focus on what's going to happen with oil. And if you followed me for a while, or you've seen, we've talked about this on the show, it's not something I normally trade. That might change given the setup of what I'm going to outline, okay? And what I want to also focus on is what the Federal Reserve, they have an important choice to make. And I believe that they might be between a rock and a hard place. So if we just step back for a second before I get into the charts, if you think about what happened in 2020 to 2022, okay, the Federal Reserve, now they're looking at a triple whammy, okay? They had fiscal policy, monetary policy, okay, and then they had which were both mistakes if you look back, okay, from history. And then when you look at what happened with the war in Ukraine, that was a triple whammy of inflation, okay? War causes inflation, there's no doubt about it, all right? So when you have fiscal policy, monetary policy, and a war, that's all inflationary, and we saw that through all of 2022, okay? So is this something that is going to take shape again? We have Israel and Iran at war, okay? Is this something that is going to cause oil to spike, okay? I'm going to outline a scary situation, a scary setup, okay? But also look at where that analysis would be wrong. Also, again, how we can trade it, okay? So let me share my screen here. All right. So this is oil, okay? Going back, you can see this spike low when it went negative. Obviously, that's likely never to happen ever again in our lifetimes, okay? And, we had the run up into 2022, all right? And then really we've had this kind of 3-year range, if you will, going back, to the top here in 2022, all the way up to now, okay? Obviously, you can see here with this red arrow, we've seen this spike, right, after this war. Now, this is where the technical picture comes into play. And again, this is very important. But and this is Elliott wave, okay, and a series of 5 waves and 3 waves, and this is a long-term chart expressing exactly that. It's showing you a possible textbook wave 3 setup. So let's start from the low, and I've started from this low, not when it went negative, okay, but in and around, call it, was that $10, $15, okay, and you can see I've labeled this 1, 2, 3, 4, 5. All right. That completes the first leg up, and we had this correction. Again, textbook Elliott wave here. Now with this 5 wave up, notice this big wave 1 blue. In blue I've noted. This is the big move. Now we had this 3-year correction. We've had this low, all right? And I've labeled this as an ABC. And this is also a wave 2. So this is the bigger count in blue. This is the smaller count. Now similar to what we saw from 2020 up to 2022, 5 waves, this could be a 5-wave move higher. That's the scary setup. What does that mean? It means, $150, $200 a barrel for oil. Is that going to happen in a straight line? No. Is this guaranteed to happen? No. I'm saying it's a possibility based on what this setup says. All right. Now, as you can see, let's use some caveats here. I have trading. There we go. See if I can. All right. Apologies for that. Had some technical issues there. But basically, what we were looking at is the possibility for crude oil to go above, 160 to 200. Okay, and that would happen until late 2028, 2029. All right. Okay, Greg, you're making that call, possible call. Now, how do we trade it? All right. Now let's look at USO. This is ticker USO, and this tracks the price of oil quite well. All right, so what I'm going to look for, all right, and you can see same, and let me outline this for you, just in case you lost connection there. So 1, 2, 3, 4, 5. This is the first wave up, A, B, C, in a wave 1. Okay, so that's the big wave 1, big wave 2, right here, 1, 2, and then if we break out in USO above 92, if we break out in oil, above 100, above 110. This has all of the characteristics of a wave 3 move higher in oil. Now, if we break below, let's call it 58 in USO, $50 in crude oil itself, that negates it. Okay, you got to go back to the drawing board. All right. So, what's something here? This is something that I'm going to be looking at. And again, we've been in this 3-year range. To me, that's just not a very good trading environment. All right. So if we start breaking above these levels, especially this 92 level, that's something where that wave 3 takes off. Now, let's stay in the short term, heading into end of June, maybe, end of this year. Okay. Things calm down a little bit in the Middle East and we get, something of a pullback. Okay. That looks something like this, right? As long as it holds at 58 and then we start seeing it trade higher again. So it goes like that. And let me change colors here so you can see it. But this would be something that's like, okay, you know what? This is where I would get aggressive, or not aggressive. This is where we could put on some trades and have very, very tight stops. And what do I mean by that? So let's say it trades down to, USO trades down to 67. We would buy here. We'd have a stop at 58. Okay. And if it starts to break out, that would likely confirm, we're definitely in this wave 3 higher. That's where we can look to, trade options or something to that effect. So, again, I think that what we're looking at now, it's going to be interesting to see what the Federal Reserve has to say regarding, what's happening with overseas and, but inflation, the tariff situation has calmed down. Are they looking at this as a new reason to say, hold on, maybe we should pause a minute? We'll see. We'll see about that later today. But this is something interesting that I'm going to be looking at, that I might be pulling the trigger on regarding oil, regarding this new situation. It might not be immediate. It might be later this year. It might be in 2026. Okay. But if we start to see this breakout, this is something that you really want to pay attention to. And again, if this lasts into or advances, and it might be slow, but if it advances into that late 2027, 28, 2029 range, where I believe we're going to be at a massive cycle inflection point for all of capital markets, that's when things get really hectic. Okay. So again, apologize for the earlier technical issues, but it looks like we're running up now. I'm happy to take any questions, and I can go back over the initial oil chart if you want, if you lost connection there. What about looking at defense stocks during times of international conflict like LMT? Yeah, that's a great question. So Lockheed Martin, I was the head trader for their pension fund. This has had, a big correction, okay? But you can see here, even with, we had this spike up, okay, with that, if this starts to break above, you can see Lockheed Martin is trading below its 200-day moving average. Is this something that starts to trend higher? Okay. Now you can see here on the weekly time frame going all the way back, right? It's been in this steady uptrend. So for me, this is something that I trade, but it's definitely something to look at. Okay. This is something obviously what's come down to long-term support. Might not be a bad investment here. Keep your stops tight. How about PBF Energy? Let's take a look. So this is starting to trade higher. Again, this is a very volatile stock, as you can see. Okay, no real trend to speak of. Um, but with volatility in the oil market, as I just outlined, this could be a situation. Let's take a look at, yeah, so very, very oversold, at least, and this is on a weekly level. So this would be something, if I were to trade it, um, you could buy with a tight stop below this 1350 level. What's up with gold the last few days? Yep, it's been, there's been an opposite correlation between gold and stocks, all right? And essentially what you're seeing here is, when you have an up day in stocks, you have a down day in gold, okay? Now what it has been doing is staying within support, but it's been pretty choppy price action, but the trend is still moving up. So what I think is going to be important, and I've highlighted this a lot of late with 10 stock trader subscribers, is this late June, early July timeframe is really going to be important to me, at least from my technical work. So what I'm looking at is the possibility that we see a low in stocks and a high in gold. I'm not saying it's going to be the high or the low in stocks. What I'm saying is it's an inflection point. So if we continue to see gold, let's say, I don't know what the Federal Reserve is going to do. We don't know what's going to happen with the Middle East. But let's say we see another round of volatility over the next 2 weeks, maybe 3 weeks, okay? We see a drop in stocks, we see a high in gold, it does something like this, okay? And then we get a correction. That would be the correlation that we've seen of late. That's what I would see as something, a possibility. Now, this would just get into overbought conditions, okay? And, we would trade lower. Is that the end of the bull market in gold? I don't think it is, okay? But that would be the low in stocks to get another rally. So that's kind of what we've been seeing in gold over the last few days. If geopolitical tensions suddenly ease, what indicator would give the earliest warning that the oil rally is losing steam? Well, I think what it goes back to is what I outlined at the start, and this all goes back to me in terms of the technical setup. That's what, again, I've mentioned this multiple times on the show. I talk about it all the time in 10 Stock Trader. This is what the greatest thing about Elliott Wave is it is a risk management system and a trading system. How is it a risk management system? Again, I outlined it at the start. I'll do it again in case you didn't see. But if we trade below this 52 level, that's where this whole setup, I gotta step back and say, all right, there's something else going on. It might just be a longer term, that we've been in that 3-year range. That might be the same thing that continues. That would be good for capital markets. That would be good for stocks. That would be good for inflation. It would give the Fed a little bit of, easing policy in terms of, okay, we're not going to have this huge runaway move in oil. So that would, to me, would be the indicator that's like, all right, this isn't as bad as it could be. Okay, that's what it would be, is a drop below 50 in oil. Are there any unexpected sectors that pop up in times of war? Any unexpected sectors? Well, obviously you have your defensive stocks. You'll have, gold and silver are going to be, the two main expected ones, because that is something that people flee to when there's uncertainty, when there's war. The other thing that I'll mention, and this might be the unexpected in the opposite direction, is U.S. government bonds used to be the flight to safety. So when there was war, okay, you would see, a flight to the dollar or a flight to U.S. bonds. That might not be the case anymore, because again, as I mentioned from the start, we have fiscal stimulus that's completely out of control, monetary stimulus that was out of control. The spending isn't stopping, the debt isn't slowing down. So the unexpected is that people actually start to sell bonds and buy gold or silver. Or stocks, some stocks for that matter, because that is the flight to safety and not necessarily the bond market anymore. That might be the unexpected result, if war escalates. Are momentum funds only a smart play when the overall market is rising? Are momentum funds. So by momentum funds, I'm guessing you're meaning ETFs and not, hedge funds or, asset managers that trade momentum. are they a smart play when the overall market is rising? Yeah, but you can also have momentum funds when it's declining. You can have reverse, or inverse ETFs that you can trade, if we are in that downtrend, okay? If you look at bonds, okay, this is the bear fund momentum to the downside, okay? And you can see here, um, this is something that has been rallying as bonds fell. So this is TLT. You can see here, you wouldn't want to invest in that if even this is strong momentum, right? This is a 5-year bear market in bonds. So it just depends on what market you're looking at. But yeah, if you have that strong trend, momentum funds are going to be a good way to play it. What does Elliott Wave tell us about potential rebound for a stock like United Healthcare? Yeah, this is a lot of UNH. When I look at Elliott Wave in this, to me, this looks like the bull market is over for the most part, at least in the short term. Obviously, you can say that, but we just haven't seen this type of rebound. Okay, so in terms of Elliott Wave, this could be. Let's look at a longer term chart. Let's look at like a 25-year chart. So I mean, you can see here, there's such a big move here that I would look at this as something in terms of Elliott Wave. Let's look at the longer term. Let's say this is 1, the bottom, and 2 was the financial crisis. Okay, a long term 3. This was 4 in May of last year, or April of last year, and this is the 5th wave. So best case would be this is A, B, C, maybe get a D or an E wave lower into, I don't know, 200. Okay. And oftentimes you'll see, previous lows mark support. So maybe in this 190, 200 level range, then you would get a bounce. But is that bounce part of a longer term downtrend that is now part of UNH? Or is this something that it would take something very, very significant for this type of price action, to get back up to new all-time highs. So I think at best, this is going to be, in a consolidation phase. At worst, you're in a long-term bear market, but this isn't something based on this longer-term Elliott Wave. This chart looks broken. How do you view CLSK? Clean Spark. Let's take a look. Yeah, this is not something that I would touch. Again, just sideways price action, no real trend. It doesn't mean that you can't make money on it, but you can just see here. I mean, you got these spikes. It spikes up. It just keeps going. This is trendless. No real direction. Okay, so you're essentially kind of gambling on something like this. Again, I'm not saying that you can't make money. This is just not something that would fit within my trading strategy. Would you look at staples like XLP to protect against the conflict? That's a great question. Let's see here. So, this is largely kept track with most of the market. And this is something that obviously, another flight to safety, if you will, not keeping up totally with a sector like semiconductors. But, this is a place you could hide. But it doesn't, that's more for, if you're dealing with an incredibly large amount of money and you want to, shift gears into what sector you want, then, this is somewhere you could hide. Are you going to make a whole lot of money by exiting semiconductors and getting into this? Not necessarily, but it is a place where, you're not going to get killed for the most part. Okay. So I think that's it for questions. Again, Federal Reserve later today. We'll see what they have to say. Again, I think we'll have a lot to talk about next week's show if the volatility erupts like I think it will. Okay, and I think that's going to set us up for some fantastic trading opportunities. So thanks for tuning in. We'll keep an eye on oil. We'll keep an eye on war. We'll keep an eye on the Federal Reserve today, and we'll see what happens, and we'll talk about that next week. Thank you very much.